Hey everyone, and welcome back to another video for today. So we have to talk again about Google Alphabet and the struggle of this stock. Now, we've known that Google is under pressure because of the rise of LLMs, right? This has been known since the launch of ChatGPT. Then we had anti-competitive lawsuits, right? Lawsuits against Google. Maybe they'll have to divest some parts of their business, maybe not. Okay, that puts some extra pressure on the business. But more recently, despite all the positive comments coming from Google, from their CEO, from their events, the stock does not seem to want to move up. Although, yes, it is up from the lows, 150 or something like that. But over the past couple of days, we've gone back under 170. And yesterday there was a report that said that Apple might be looking to partner up with Perplexity in order not to rely so much on Google anymore. Now that's a $20 billion question for Apple and around a 30 maybe plus $billion question for Google, because Google does pay Apple around $20 billion or so to be the default search engine on Apple devices. Now there was also reports, we're going to look into that a bit more, that if Google were to not be the default option on iOS devices, it could cost them around $27 to $32 billion or so. So that's a big question. Now, of course, it's not black and white. There are many options out there. Are people still going to be using Google Search, Chrome, even if Google is not the default option? Probably. Could this also be a tactic because, Google is under pressure, there's some scrutiny, so could this also be a tactic to show those that are skeptical about Google's, maybe not Google's dominance, but the anti-competitiveness around the search market and say, look, we're actually, we're looking for new deals, right? New ways of searching. And so you cannot say that Google is a monopoly anymore because there are a lot of other competitors out there. Maybe that's just a way to renegotiate a deal and to maybe, let Alphabet, Google off the hook. Maybe Alphabet and Apple will have a revenue share deal going forward. Remains to be seen. But let's discuss this whole scenario in this video. If you enjoy this type of videos, leave it a thumbs up, subscribe. If you have not, we really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. All right, so right now Google has a market cap of just over $2 trillion, a trailing P of 18.9 times and a forward one of 18.3 times. Over the past 5 years, the stock has done quite okay, right? Has more than doubled. It's actually up 140%. Year to date, stock is still struggling. It's still down around 12% or so. The average analyst price target does sit at $201. And currently, the market is expecting Google to grow its revenue for the coming fiscal years by 10% each and every fiscal year. Free cash was actually expected to grow a bit faster than that. And the same goes for EPS. Now, more recently, there was Google's I.O. keynote. So if you missed that, if you missed my review of that event, here are the key financial highlights. By the way, this is on FinChat. Link is down in the description, 15% off. So they said the following. Token processing has increased 50x in the last year from 9.7 trillion to 480 trillion monthly tokens. Over 7 million developers have built with the Gemini API, a 5x increase since a year ago's I.O. Gemini's usage on Vertex AI is up more than 40x since last year. The Gemini app has over 400 million monthly active users. AI overviews in search have more than 1.5 billion users every month, and Google Lens has over 1.5 billion users every month as well. And the list goes on and on of incredible metrics here. So clearly, even after 2 years or so, close to 2 years of ChatGPT being out, Google is still growing. Search is still growing. Search queries are still growing and becoming longer as well. Because guess what? Google search is evolving. This is not a 10 blue links business anymore. No, it has been evolving for quite a while. And more recently, it does seem like Google is back at the top, right? Whether it's Gemini 2.5 Pro, that still sits at the top currently. Plus, you've got all the other announcements, VO3, Flow, you name it. And don't forget that Google also today has a business that is generating over $50 billion every year and growing very fast, high margin business, something that it didn't have 10 years ago. and that's the Google Cloud business. YouTube is still growing quite rapidly. So there are plenty of parts of Google's business that are still growing quite nicely, and people just forget that they exist. Of course, the largest chunk of their revenue is still Google search and other revenue. Of course, if we look at that growth rate, it might not grow as fast as a Google Cloud or something, but last quarter, that still grew around 10% year over year. If we look at Google Cloud, for example, this is a very, very fast growing business with high margins. Now, it's not the margins that AWS has, not yet, but I believe that in the future, because of Google's TPUs, because of their, I think, best-in-class cost structure, I think they can have insane margins on their Google Cloud department. Now, yesterday or 2 days ago, Pershing Square Bill Ackman did release the following piece on Google. So revenues grew at a robust 15% rate, led by strength in its core advertising business and rapid development of AI innovations. In search, the company has successfully rolled out AI-powered summary responses called AI Overviews. Early engagement with AI Overviews has been highly encouraging, with consumers searching more frequently with more detailed queries and clicking through at higher rates. The company has reduced the compute cost per AI query by more than 90% over the last 18 months, a step function cost reduction which has enabled Google to roll out AI Overviews broadly to more than 1 billion users. The company also recently introduced ads on AI Overviews and has explained that these ads are already monetizing at the same rate as regular search ads. Over time, we expect more context-rich AI responses to drive even higher conversion rates and efficacy on ads. Beyond search, Google's AI capabilities continue to differentiate and strengthen the company's other business lines. AI-powered creative tools have propelled YouTube to be a leading destination for content creators and driven its success in the short-form video format and on connected TV, where YouTube is the #1 streaming platform in the United States by watch time, according to Nielsen. I mean, you're watching this video on YouTube, are you not? Google Cloud segment, which is now nearly $50 billion run rate business, grew 31% in 2024, driven by demand for the company's enterprise AI offerings. Most notably, the segment's impressive growth rate was potentially capped by near-term capacity constraint, which the company is seeking to alleviate with its expanded $75 billion capex plan in 2025. I'll skip the other things here, you can read it and pause the screen. Despite tremendous business momentum, Alphabet still trades at around 18 times forward earnings, a highly discounted valuation for a business of its quality and growth prospects. As the company executes on its AI potential and margin expansion opportunity to drive rapid earnings growth, we expect its share price will increase to better reflect its strong underlying business fundamentals. Couldn't agree more. Now, one thing that will probably still put some pressure on the stock is this. Apple pursues an unprecedented partnership with Perplexity AI. Apple is considering a strategic partnership with Perplexity, an AI startup, marking an aggressive attempt to expand its AI functionalities and possibly challenge the supremacy of Google's search engine on iPhones. This collaboration seeks to implement Perplexity's sophisticated AI-based search technology as a substitute for Google Search on Safari, as well as an additional AI voice for Siri, Apple's virtual assistant, shifting from a dependency on ChatGPT and Google's AI services. That's not all. Samsung, another company that gets billions of dollars from Google so that Google becomes the default there, Samsung is simultaneously negotiating a deal to invest up to $500 million in Perplexity, intending to preload the app and assistant on new Galaxy devices, starting with the Galaxy S26, expected in early 2026. Samsung plans to embed Perplexity's search capabilities into its internet and Bixby, persuading other smartphone manufacturers to depend less on Google by developing an AI-powered operating system is a strong motivation for Samsung. This simultaneous focus from other smartphone makers highlights the growing importance of Plenitude and the shift manufacturers make to broaden their AI partnerships and capabilities, moving away from the monopoly of Google and OpenAI. Of course, Samsung still runs on Android. Android is owned by Google Alphabet. But again, this is going to be quite interesting. Now, it continues here. Remember, Eddie Q, Apple's senior vice president of services, confirmed the conversation with Perplexity in his testimony during the Google antitrust trial. indicating Apple's willingness to explore expanding their partnerships beyond OpenAI's ChatGPT and Anthropic's Claude. This is part of Apple's broader strategy to mitigate reliance on Google, whose search engine has been the default on iPhone for 20 years and is estimated to have paid Apple $20 billion in 2022 as part of the deal. Now, of course, if, let's say, Google does not have to pay Apple $20 billion anymore, and I don't know how many billions of dollars they're paying Samsung, but that's $20 billion that does not flow to Apple's bottom line. That's, what was it, 10, let's call it $12 billion that does not flow to Samsung's bottom line. That's extremely high margin revenue that completely disappears for Apple. Now, of course, for Google, that's $20 billion that they get to keep. But of course, now that Google is not going to be the default on those devices, they will get hit on the advertising side of Google's business. Now, how big that hit will be remains to be seen. But yes, despite iOS being less popular worldwide than Android, iOS users, I think you can monetize them way more than Android users. And so we have here a couple of scenarios because this is quite interesting. So of course, Apple, they get $20 billion or so from Google a year. The current state is that they have less control over the search experience. Now, scenario number one, Apple replaces Google with Perplexity globally. So they lose that $20 billion a year from Google. That's a possible scenario. But they'll probably get AI leadership, or maybe their AI leadership status recovered a little bit. They'll be differentiated and they'll have more control. Major scaling and reliance will be on Perplexity, which might lead to maybe Apple acquiring Perplexity straight out. Scenario number two, and this is a very interesting one. Scenario number two, Apple replaces Google with Perplexity, EU only due to DMA. Now, of course, this will mean that a portion of the $20 billion a year from Google will be gone. They will still have the same status that we've mentioned before. But remember that in the EU, if you buy a new phone, when you first use it, it will ask you, it will list all of the options, right? Maybe DuckDuckGo, maybe, I don't know, Bing or whatever, Google Chrome. You will have that choice. So even if they have no partnership with Google anymore, they partner up with Perplexity, every user in Europe will have a choice when they start up their phone. And that's the thing. Usually, users will just go with what they know, which means they will still choose, in my opinion, they will still choose Google Chrome. Now, of course, some might not. That's normal. But I do still think that the majority of people will just go with what they're used to. Now, of course, that's just an EU thing, not a thing in the United States, at least not yet. Then as for Google, well, of course, the current state is that they have massive search ad revenue. They're dominant in the mobile space as well. Scenario number one would mean that Google might lose $28 to $32 billion in revenue from the iOS queries. That was an estimated number from a couple of years ago. And of course, they'll lose market share in the mobile search realm. And then in the other scenario, still significant revenue loss, notable mobile search share loss as well. But here, I guess they'll lose just a little bit less. Remember, this is still them saving $20 billion plus a year. Of course, the question still remains, how big is that impact today, right? That $28 to $32 billion in revenue loss from the iOS search queries. Has that grown over the past couple of years? Has that not grown over the past couple of years? Remains to be seen. But these are the possible scenarios. And of course, then for Perplexity, it's positive across the board, right? If they do get on iOS and Samsung devices, this is just going to fuel huge growth for Perplexity. Their valuation will go up. More users will use. I use Perplexity. I have Perplexity Pro. I got it for free actually from the CEO when I met them in Miami. It's a great way to search. I am on the waitlist for Comet. I still use Google Search as well, and I still use Gemini because, well, I'm a Google super user. Everything I have is Android and Google. So maybe my case is not the general case, although the data doesn't lie. The data still shows that billions of people are using Google, and it's actually growing, which I've shown you right here in a couple of other videos, right? This is global Google daily active users. This continues to grow quite nicely, and this is purely in the United States. Google has approximately 52 million mobile daily active users. That has grown 7% year over year. And actually, that's a bit faster than the 6% year over year growth from March. And so what you're getting right now is this. Google has never really traded at a huge premium compared to all the others, right? If you look at the trading PE here, right now it sits at 18.5 times. The average was 29.8. Well, it's because that one-time huge spike here in the PE ratio. But if you look at the forward one, the average over the past 10 years was just 23.4 times. Yes, we are of course lower right now at 18 times, which is incredibly cheap. But it has never really been like super expensive like an Apple. Apple has a trading PE of 31 and a forward one of 27, 28 times or so. Alphabet is a business that's expected to grow revenue over 10% over the next 3 fiscal years. Free cash flow is expected to grow just 5.1% in fiscal 25, but then 18.4% in fiscal 26, then another 20.5% year-over-year growth in fiscal 27. Compare that to an Apple where revenue is expected to grow, 5%, 4% or so. Free cash flow for the year expected to grow 0.5%, then accelerate to 15.1% year-over-year growth, but then decelerate to just 10.4% year-over-year growth in 2027. That's the current expectations. Of course, a lot can change. And if we look at the last couple of years, net income, Google has grown net income much faster than Apple. And actually more recently, they have surpassed Apple. Apple's net income has basically been plateauing for the last couple of years, and yet Apple deserves, according to the market, a higher premium. It might be because Apple generates more free cash flow than Google. Their free cash flow margin is also a bit higher than Google at the moment. And maybe you might say, look, Apple's future free cash flow are more predictable than Google's, and that's why it deserves a higher premium. And I would agree, but not that big of a difference. And so all in all, that's about it. I think now we can figure out why there has been so much pressure on the stock. Maybe yes, maybe Google is going to get replaced by Perplexity or whatnot on Apple or Samsung devices. Now that could definitely help their case. But the stock might get more under pressure because of, the revenue hit. But at least we will not have the antitrust issues anymore. And then it will just be, okay, maybe not. Google might get hit revenue-wise. Remains to be seen. Currently, the data suggests that Google is doing everything they should be doing, finally, because that was not the case around 2 years or so ago. But in 2025, Google's AI game is really top level. Plus, like I said, you have Google Cloud, you have YouTube, you have the other bets. I think Waymo, I keep saying the same thing, but I think Waymo can be worth hundreds of billions of dollars in the future. And you've got every other AI thing that Google is doing under Google DeepMind and all the other Google X investments that they have. So it's a tremendous business. It's still one of the best businesses out there, extremely profitable. I'm very bullish on it. Of course, I'm biased. I'm holding shares. So that's about it. What do you think? Let me know down in the comment section below. Like, subscribe, all of that. And I'll see you all in the next one. Bye-bye.